right, let's get started here, guys. It's just about straight up 12 noon on Thursday, Feb 20th. Hope everybody's doing well, having a good morning. It's Futures Brizio here, just popping in with a quick live update. I actually was going to try to do a live stream this morning, but I had to go out. I actually just got home. So I figured I had a couple of things set before I left today, early this morning. So I just wanted to cover a couple of things. So we'll do a quick review of markets and then just wanted to cover one little tweak or potential thing you can do with this moving average strategy that I posted a couple of days ago. Again, super basic, nothing groundbreaking here, but just a suggestion in case you do want to use a moving average. So, all right, so let's just jump right into charts first. So I guess we'll start here in Forex, GBP USD. We continue to make, this is the daily chart. We continue to make higher highs, higher lows here. We did have this little pullback area here that led to a nice little move up this morning. So this certainly was something that you could have taken. I actually was in a long in this. I closed it a little early. I closed it this morning before I left right in here. So I did take a little profit. I closed it out. It did pop higher. I should have just left it because the daily chart is pretty bullish. I was a little concerned when it stuck this morning because if you look to the left on this crosshair, you can see all the to the left here, all these previous areas where this price around this area acted as especially as support, but also resistance. You can see multiple touches on this, whatever you want to call this, 126 area, somewhere around there. But those are not as important as these major swing areas that price will react off of. So I do think price will continue to push up here and probably get at least back to these highs potentially up here. So overall bullish bias on GBP USD, but not in anything at the moment. I am in Euro USD, which pretty much looks a little different, but it's pretty much the same thing where, we pulled out of here. Look like we're starting to make higher highs and higher lows. Again, on the daily chart, we had this break below the moving average right here. Okay, we had these, this 3 candle pullback here, and then today we have this bullish engulfing candle. So to me, that's full boat to take a long position. I did have on the 30-minute chart this zone marked out on the swing on this down. Actually, this was probably the more reliable place where you could have said if price breaks through here, then the uptrend continues. So that really was done on this candle, and we've been moving higher. So I do think that this will continue higher. This looks like we do have some bullish momentum on the daily chart, so I remain pretty bullish on that. Euro yen continuing to trade down. Again, this is the daily chart, so we just dropped down a little bit. You can see we've kind of like run into consolidation here on the hourly chart, 30-minute chart. So we had this entry here. Price did go down, made kind of an equal low, which is a little bit concerning. So we'll see what happens from here. If we go back out to the daily, we do have this area right here. These lows here, which are not there's actually bigger lows below there, right? We got these lows sitting down here. We probably should make this like a zone. Yeah, we got kind of this area right here, but anywhere from about where price is now down even a little bit lower are potentially areas where price could react from. So I'd be a little cautious about continuing. There might be a little bit more downside push here on this pair, but as we head into these previous lows down here, whether it's this one in the middle or these other two on the ends here, and you can see we had a big rejection off of this in the past way back here. I'd be a little cautious of taking this short below where current levels, because we might definitely see a bounce off of here. I don't know if we will, but just on past history. Unless price comes down and basically takes out all of these swing lows, then I would expect we might see some sort of a bounce higher here in euro yen, just a technical bounce if nothing else. So we'll see. So trade euro yen accordingly, but I might be a little cautious trading it short for a while now, until it shows if and when it wants to break through these levels. And if we begin to have a shift back to the upside off these levels, then breaks in structure certainly can give us some clues that we may go higher. I'm not saying this area right here will be that area, but you can see we have equal lows sitting here now. That's really the first time we've had that happen on this down move, where prices kind of made a correction and not made a new low. This is definitely an area to watch to see if we bounce. I'm not saying it's going to go higher from here, but it's definitely an area that has looks like it could be giving some kind of reaction. I've added Euro Aussie, and I'll talk about this after, just from a daily standpoint. So let's look at the rest of these regular pairs. So on the Swiss yen, I think a lot like euro yen, we are approaching these levels down here on the daily chart, all right, where prices kind of come into this area here. And so I'd be, again, a little cautious about trading any more Swiss yen below this, down here, as long as we're kind of bouncing into this area, which clearly, we've now made 1, 2, maybe 3 touches on this zone. If we go to the 30-minute chart, we haven't really broken any structure yet. I mean, this area probably right here on the shorter time frame probably be like an area I'd be looking for structure, probably more so than this one, because this was a more substantial pullback here. So, but it's definitely having a reaction off this zone. It did put a new lower low in, unlike the euro yen, but still, I would trade this short very cautiously, if at all, just because it is running into a pretty big zone on the daily chart. Okay, so we may see a reaction off of, and I would imagine it's going to be around the same type of story on dollar yen. So let's zoom out. So dollar yen, there aren't as many levels, but we are approaching this level down here, which you can see we're running into today. So dollar yen was probably a little bit better of an option today. But again, it's just starting now down on the 30-minute. You see we're just tapping the top side of that rectangle I drew on the daily chart. So again, not saying it's not going to go lower, but just be cautious about your levels on the higher time frame. And know that this area here, if we go out to the weekly, even just for a broader view, this was, basically a pullback. This level was formed on a pullback of an uptrend. So we had price going up through here. Price came all the way down, tagged it, went up, made a new high, and now we're coming back and retesting that area. So this area now becomes kind of a critical area to watch. Do we bounce off of here? I mean, we might get all the way down inside of here. I don't know where. But do we get a turn higher off these levels? Technical bounce. Again, looking for zones for price to break to the upside. On like a 30-minute chart, maybe we, get up above this area conservatively. Then maybe we go higher. I don't know. But again, just like the LA yen pairs, just be cautious that we could be at a spot right now where these short opportunities could be getting a little long in the tooth potentially. So just trade them cautiously. Maybe wait and see what happens from here to see maybe if you get any at least short-term upside moves to take advantage of. But I'm going to probably hold off trading any of these yen crosses short. I know they've been really juicy for the last really several weeks, but that could be at least temporarily pausing unless we blow through these levels that are obvious on all the pairs, that at least on the 3 yen pairs I have up here. So we'll see what happens, okay? So let me just go back to Euro Aussie before we go over to futures, and this will kind of tie in with what I want to talk about with the moving average strategy. So I made the video the other day talking about the simple moving average, which is this white dotted line on the chart. It's just nothing fancy. It's just a simple moving average. And I was using a 10 period on the shorter time frames, like the 4-hour and down. And again, the moving average is not a trading strategy. It's just a way to help you visualize potential areas to enter and potentially exit, but especially enter trades in a trending market. So when they pull back, when the price pulls back, that a breach of that moving average is a good potential low risk, high value area to enter. And so, but what I wanted, the little tweak that I made is on the daily chart, I actually turned this into a 5 period moving average. You can see right there where my cursor is, moving average 5. So it's still an SMA, simple moving average. I just made it 5. And I think on the daily chart, it's a little better because you could potentially miss opportunities. The 10 period for this type of system, you could probably use the 10. To be honest, it really depends what market you're trading, what Forex pair, whatever you're using it on, because it depends on the volatility a lot of the asset. The 10's not going to make a heck of a lot of difference, but I felt like, at least on the daily chart, to tweak this down to a little bit to a 5. So again, the theory is here, you're still using price action and market structure. That's still the primary technical tool you're using here. The moving average, again, is just a way to help you potentially time your entries and look for high value areas to enter in the direction of the trend. So if we take this Euro Aussie trade, for instance, so let's just say, consider we're in bearish order flow right now. Price came down here, and you can see we broke above here. So once price gets above this moving average, and in this case the 10 period one probably would have been fine too, because the correction went quite a bit further. And this is what I was saying, depends a lot on the volatility of the asset. The Euro Aussie can be pretty volatile. It can have these big swings, unlike something like maybe Euro dollar or pound dollar that are more heavily traded, has more volume, doesn't whipsaw quite as much. But either way, 5 or 10, you can play around with it, use whatever you want. But the point of this is, if we're in bearish order flow, which we obviously are right now, we took out a lot of market structure in here. So we just concentrate on from this area down. When we pull back here, as soon as we get above the moving average, then I'm going to start monitoring shorter time frames. So in this case, you could have just waited until even on the daily chart for the first bearish candle to paint. So you would have taken a short basically right here. But sometimes you're going to have like a big candle, big daily candle, and it's not going to be a good fill because the price would have already moved so far by the time you wait for that daily candle to close. So you can go to a shorter time frame once you see. So if we just look at this area right here, and we go to a shorter time frame, let's just examine this. And I haven't looked at this, so we're going to do this right now. So you say, okay, you're watching this. Let's say we go back 1, 2, 3, 4, 5, about a week ago, 7 trading days, 8 trading days or so ago, and we see this, and you're looking for short positions. Then we go down. Let's go to the hourly chart. Here's that area on the hourly chart. Okay. Now on the hourly chart, or even on the 30-minute, if we go, let's shut off the scroll so we can see this. So here it is on the 30-minute chart. As soon as we get a close below the moving average, so a good entry would have been right in here. If we go back to the daily chart, and I show you that other entry using the daily candle, let's just put a little line on that. The close was right here. So basically at the close of this candle, and now we go back to the 30 and we see the difference on the 30-minute. So here, yeah, so here's that zone on the 30-minute. So this was the break. So basically anywhere around here would have been your entry on the daily chart, but you see you would have missed all of this, which is a good chunk of the move. Whereas, once you see that pullback on the daily chart, Then you can maybe start going down to a 30-minute, hourly, whatever time frame you want to use. It wouldn't go too short, maybe no lower than a 15-minute, maybe 15-minute to 1 hour. And you want to wait for some clear bearish price action here. Now, I know everybody's, well, your eye might be drawn over to here because again on the daily chart, we had these two bullish candles. So on this one, we had on this first one that crossed over the moving average. Go back to the 30 now, because I just want to try to be real here. So just follow with me here. Probably on the 30-minute, this was probably that first candle, like right in here, and you see this thing dip way down. But you can see it never closed below. We had this big liquidity sweep, came up, closed. This is very bullish to me. So even though we had these little candles break below the SMA on the 30-minute chart, I still wouldn't have taken this short because we had this big buying that happened right here. And price pulled back only a little bit and then shot back to the upside. So even though I just told you up here that you can go short on the break of the 10 SMA on the 30-minute chart, you're like, well, what about back here? This would have been a losing trade. And you're right. But you got to kind of use a little intuition and say, look at this right here. Look at this. There was huge selling going on right here. And the buyer stepped in, snapped this right back, and closed this significantly higher. So these little pullback candles, these low range with lots of wicks, this is not an area to go short, because you've got all of this sitting right here. This is just a little pullback, and then you can see we painted this candle, and then we went up, okay? So I would ignore that one. So then you go up here, and then so your next opportunity to go short would be the break of the moving average here. You can see we also put in a lower high right here. Price went up, made this high, pulled back, tried to go up again. This actually would be a nice signal for me. Lower high put in, followed by a bearish close below the moving average. This right here would have been my probably my entry right about here. And you can see you would have gotten all of this instead of waiting for the daily candle to close down here and leave all of this on the table. Okay, so the point of all this, let me just clean up this chart now. All right, and we'll go back to the daily. The point of all this is a way that you can, if you don't want to be in front of your charts constantly and you want to be more of a position swing trader, and maybe you want to monitor multiple pairs instead of just 2 or 3 on a shorter time frame, that's really about all you can handle if you're trading on a short time frame, because otherwise you're looking at too many pairs, too many assets. You're going to get trading paralysis, analysis paralysis, not worth it. So if you're going to trade in shorter time frames, I would greatly restrict the number of pairs I look at. But the nice thing about the daily chart is obviously it only paints 1 candle per trading session. So you can easily just sit there, and as long as you can easily determine the direction of the trend, then you just wait for these pullbacks above the SMA on the daily chart. So this would have been your last chance to enter, like I was just showing you on this pair. There's no opportunity now, at least on the daily chart. Certainly now you could go down to like a 30-minute chart. If we mark off that daily close again, let's say, right here. Now we drop to a 30. So here was that daily close. So here are more opportunities to go short, right? Pull back here. We had pullbacks all in here, this one, right? So again, the market is fractal. So if you're in bearish order flow, if you don't want to be in the charts all the time and you're willing to just wait potentially many, many days or weeks for a trade to set up, then you can use the daily chart. It's very easy. Just wait for these pullbacks within the trending market. And as long as market structure is honored and held. So here, this is a pullback and a downtrend. As long as this area held up here, anything that pulled back above here is just a correction. Now, if price shot up here and then broke through these highs, then obviously that would be a change in direction. But as long as this holds, and this is just a pullback, And then once you see those bullish candles, in this case, start forming above the SMA, then you can go to your shorter time frame and start monitoring for a change in momentum back to the downside. Just don't be, in a huge rush to jump in. Make sure it's confirmed, because again, this is a daily entry. Technically, you're going to have plenty of opportunity for this thing to move in your direction. So just, don't be patient. Try to pick the exact top, let the market show you its hand, and then jump back in the direction of the trend. Okay. But if you miss this, like we did here, because I just started looking at Euro Aussie literally yesterday, so obviously I missed this entry. This was a week ago. Then you could consider going to a shorter time frame, again down to your 30, and then just start waiting for pullbacks on the 30-minute. Decent pullbacks. We had some smaller ones here. We had this one. This one's not great. It did go down. Then we had this one here. We went down, kind of made a new low, and then we had the bigger pullback. So you can, if you want, you can take these little ones like this, or you can wait for these more substantial ones like this one, and like this one. This is only a 30-minute chart, so this is only, maybe 1 day to wait for this big pullback to happen. If you figure these are 30-minute candles, so you can get 48 of those to cover one day. This is 25 candles. So this is only a half a day. This only took a half a day for this correction. All right. And then you can just go from there. So that's the fractal part of the market. But again, the point is, using the daily chart, if you potentially can give you the opportunity to monitor more pairs, because you're not going to be, you're only going to be looking at these once a day, and you're going to wait for, once you've identified a trend, you're not going to do anything until the price pulls back against the trend. In this case, over the moving average. If it's a downtrend, it would be below the moving average. No, excuse me. If it's an uptrend, it would be pulling back below the moving average. In the case of a downtrend, it's pulling back over the moving average, like this. And then once you see that, then you can start monitoring your shorter time frames for a change in momentum. Like I said, you can just wait for the daily candle to paint a bearish candle as well, like here. But as I showed you, you're leaving a lot on the table, because on the short time frames, that's a pretty substantial move that you could have taken advantage of and potentially have lower risk. Okay, so this is kind of a separate thing, but it's using the moving average on the daily time frame. It's flexible. You can use it on any time frame. But the key thing is, one, you got to identify a trend, and if it's completely sideways garbage, like we had like in here and over here, and unfortunately this pair can do this. But clearly now we put in a lower high. As of here, we're trending lower. Okay, we went up, we came down, tried to go higher, put in equal or lower highs right here. That's your first sign that this uptrend, this previous uptrend, is ending. Went down, took out structure right here, came up, put in a lower high. So anywhere, especially from this point down, where you're in a downtrend. So now it's just a matter of waiting for pullbacks, and you could trade this potentially all the way back down, at least through these lows down here. So we've got quite a ways to go to see this maybe come back to some previous lows, and we'll see what happens. But if you miss this, then of course, yes, you can monitor the shorter time frames, the 30-minute, the 1 hour, and you can see that there are plenty of areas in here where you could have entered on a break above the moving average, with this area here and this one here being the best two in terms of risk to reward, and then watching this go down. And if we take like this area, and it's the same process, right, as I was showing you on the daily. So this is a pullback on the hourly chart, right? So let's just look at this area right here. This is the hourly chart. Well, again, if you wait for a big bearish candle to form, like next candle here, then you left quite a bit on the table, right? We had this high put in, and then boom. So maybe you go down now to a shorter time frame. Let's go to the 15-minute, okay? And you can see we had this push up. And again, this is the danger of going to the shorter time frames, because you can see this one right here, all right? Now, unless you were smart enough to get out right here, recognizing a higher low, you may have gotten pulled into a short right here only to have this thing shoot higher. Now, depending where your stop loss was, you may have been able to sit through the drawdown to have the real move happen here. But this is what they do to you all the time. You get fooled into thinking this is the real short. They spike it down, they put in a higher low, and then it shoots up. They know everybody's got their stop losses sitting right above here. They take everybody out with this wick, and then the real move happens. And they even took out people maybe that had stops sitting even higher at the next level up here. So this is unfortunate, but it happens, right? And so you either have to just sit through some drawdown, or you take the loss and you reload. Maybe you notice that this put in a higher low right here anyways, and so maybe this would have been your warning to get out. But let's say you did get stopped out, you had another opportunity to enter up here. Okay, so unfortunately, this is what the big players do. You either have to work with them or you're going to be subject to them. All right, but anyway, so let's go back to concentrating on this area. So again, this is how you can just take advantage if you miss that big daily move. We saw the pullback on the hourly chart. Let's forget about this here. I just told you what could happen with this. We'll concentrate on this high right here. So we're on the 15-minute now. You can go down to a 5-minute, and there's your lower high put in right there. Price starts to trend down, tries to go up again right here, fails, puts in a lower high now, and then drops and takes out this area right here. This is all the way down on a 5-minute chart. And then what happened? The market collapsed. All right. So again, we did it on the daily chart looking for an entry on the 30-minute to 1 hour. If you miss that daily entry, but you know the market's going to be making trend and you want to be in the market and you have time to look at it, then fine. Then you go to, monitor your 30-minute or your 1 hour as your higher time frame, and then look for your entries on the 15-minute or the 5-minute like I just showed you. Okay? So there's lots of ways to do this. But getting back to my original point is, if you don't want to be involved with, hyper analyzing super short time frames, then fine. Stick to the daily, wait for the pullbacks on the daily. As soon as you start to see it break above, be patient. These corrections can take several days on the daily chart. Blue candle, we're still in an uptrend. But then, especially if you start seeing big wicks form, intraday, then you can go down to your short time frames and start looking for entries to the downside. Okay. And from the daily chart, I'd go down to like a 30-minute, maybe even a 15-minute, somewhere in there, and look for that entry for this on this daily candle. So you're not waiting for this one here and leaving, a third of the move on the table. Okay. And it also potentially gives you a lower risk too, because you're getting in on a shorter time frame, so your stop loss theoretically should be smaller too. I hate to use the word sniper entry, but a lot of people like to use that. So whatever phraseology you like, okay? All right, so that's it for Forex and talking about this 10-period moving average or 5-period moving average. All right, let's quickly jump over to futures, and we got to wrap this up. I got to go. So here's the DAX. I took a short on the DAX this morning. You can see I was saying yesterday that we had two zones of interest. We had this zone here, which is a lower time frame zone. So it's not really a favorite one of mine, but if you go down to the hourly chart, you can see this little zone where price had this nice pullback below the moving average and went up. So I marked off that zone. But on the 4-hour chart, this zone is not really very impressive. As you can see, it didn't break the moving average. There wasn't even a bearish candle here. This is a more substantial zone on the 4-hour time frame. But you can see price came down. But when I saw price working this during the overnight, where it was trending up above the moving average, so we had this big move down yesterday, and price kind of very choppy, corrective price, low volume candles came up above the moving average earlier today. And then as soon as I saw this break below well, I drew a little trend line here too, but we had this break down below the moving average and break of this trend line. I took a short right there, put my stop above the swing high, and you can see it has come down. Now it has tried to break through this zone, which it did, and now it's kind of retracing. So let's see if we get something, like this where price tries to come back up and then, fails. And this is what I'm hoping it does. And then makes a bigger move, down towards this area here. So I'm going to hold this for now. I don't know if I'll keep this overnight, but I still think this is the more important zone. This is more of like a shorter time frame zone. You can see it is reacting around here. Totally understandable. But I'm not sure it's going to hold that because we did close below this zone. We are kind of dead cat bouncing, but we'll have to see what happens. You can go to a shorter time frame and look for price action just to see like what it's doing on a shorter time frame. If you really want to drill down here, I'm down on a 10-minute, I can say, well, as long as price holds below this area, I'll keep this position. If it breaks back above this little high on the 10-minute, maybe that's going to be a bigger pullback. So, again, the market's fractal. But overall, I would like to see this fail here and come down and at least retest into this zone, okay? But clearly, at least in the short term, we're bearish on the DAX after a huge run up. I would expect to see a little bit of a breather on this. And, after we saw these giant 2 bearish candles earlier in the week, that was to me a sign that we're going to at least take a breather on this up run. I'm not seeing it's a full reversal, but at least a pullback. And if it is just a pullback, then I think this area right in here is a nice target, more so than this one. But I did draw this one in just to say that price could have some reaction from here, which it has. So anyways, I'm short on the DAX. So here's a trade that I'm currently in drawdown on, and I may just close this. It's pretty close to my stop loss. This was copper. And if we zoom out a little bit, you can see we came down to this zone here. We chopped around, started to move higher again. Once we closed above this swing right here, I felt like maybe we'll go higher, but you can see it's failed. It's made multiple attempts above this level and keeps selling, and now we've had some bearish price action. So I'm probably going to close this one. So and I'll probably just kind of wait now and see what happens. Copper, if this area fails and we start heading lower, then I do think we're probably going to break this zone entirely and probably move lower at this point. So let's see what happens. Again, we had very bearish price momentum here with this candle. Prices come down, gotten hung up at this zone, tried to push higher. But again, if this high fails, which it looks like it has, then I would say that we probably are going to head lower. So we'll see. In which case, I'll just, stand aside and potentially look for shorts. But, I'll wait and see what happens with it. Okay. So that's copper. It's in a little bit of a change right now. So we'll see. I did not trade cattle today. There actually was a short here, but again, I wasn't here when the market opened this morning, so I didn't trade it. But again, we've been in this downtrend. This was our last swing now, I would say, is this high right here. And so we had this trade this morning to the downside. You can see I had this little shorter time frame structures in here that I had drawn probably yesterday. We did break that. Okay, but I did not take this trade in full honesty because I wasn't home. The market opens at 9:30 and I wasn't here. I left around 8 o'clock this morning. And I was not in front of my computer. So sad for me. That actually would have been a good trade, but I didn't take it. But again, it just shows you the power of just waiting for these pullbacks into a value area. And then this is the 30-minute chart. I mean, you could go to a shorter time frame here. Here's the 10-minute chart, right? Going up, new high, put in, pulled back. Okay, and then when it comes up again, fails to put in a new high. Here it is again, right? Lower high right here, followed by a bearish candle. This is your ideal entry right here. And then you would have had all of this. Stop up above here, done. Okay, beautiful trade. Sadly, I didn't take it. So, but that's the analysis on it though, right? 30-minute, 1-hour chart. Pull back above the moving average. Where's my timing? Drop to a shorter time frame, in this case 5 to 10 minute chart. Failed higher high right here. I mean, you could have gone short anywhere in here and put your stop here, but the ideal entry for the lowest risk would have been if you didn't catch this, which at this point you didn't know, if it was going to go lower. But so assuming you didn't catch it right here, this was the next ideal spot on this failed higher lower high right here, and then you can see the market broke down. Okay. And then natural gas, I'm still in this short right here. Again, kind of the same thing as copper. We had a big run up. We had two really big, heavy bear candles. Now, this is only a 30-minute chart, but if we go out to the 4-hour, it's even more substantial, right? Here's the 4-hour chart. To me, the next really big zone of opportunity here in terms of turning the upside back is probably somewhere in here between this gap. And you can see this big bullish candle that pulled out of this zone. So if that's true, then we'll head a lot lower. There is a less substantial zone right here on the 1-hour chart. You can see it right here, which is kind of where price is sitting right now. So if this area breaks, obviously you can see it's reacting off of this zone right now, but it's a minor zone compared to this 4-hour zone. But if this holds right here, then price probably will turn higher. But if we manage to break through this box, then the next run down is going to be back here, probably around the breakout area of this last pullback, which would be like right here, which would be a good management spot right about there. The first kind of big bullish candle pulling out of a consolidation zone. This area is where all the buying took place, like right in here. So anywhere within the range of this candle would be a good target if it manages to bust through this zone right here. But understandably, it's having a reaction off this zone because everybody else sees this. And then you see on the 1-hour chart, we see this bullish candle pulling out of this zone. So there was a lot of buying taking place. I'm not saying it's going to get through here, but if it does, it will probably come all the way back down to somewhere in here. So I'll be managing this trade. If I start to see that it's running out of steam and heading north back today, I'll just close it, take it as a day trade. I'll be happy with that. So, all right, so that's natural gas, and that's where we sit on that one. All right. So, and as you guys know, I'm not using the daily chart on futures because of the contract months. It's not like Forex, which is just perpetually, in time. Futures, you're using limited time contract months. So on futures, for me, generally, the 4-hour chart is going to be my higher time frame, and then I'll use the lower time frames, the 1-hour and lower, for entries and exits and stuff. But for me, the 4-hour chart is my preferred time frame, higher time frame perspective in futures. Whereas on Forex, especially if I'm just swing trading it, the daily time frame will generally be my my higher time frame to analyze. Okay, so there you go, guys. That's it. Hope that was helpful. Questions, comments, leave them down below. Make sure you like the video, subscribe to the channel, smash that bell notification so you get notified when I make new content. And I hope it was helpful. Have a good rest of the day. I may pop in and make an update video tonight. We'll see where all this shakes out. But that's the update for today for the midday session. All right, guys. Take care, and I will